right. Good morning. It is Monday, July the 7th, 2025. We hope everyone here enjoyed the nice long 4th of July weekend. Our family got to spend some time with some old hockey friends of mine. We have similar age kids, so really, really nice weekend for the Kroll family. Gosh, thoughts and prayers go out to everyone, families down there in Texas. Just again, I don't really watch the news over the weekends, and someone mentioned that. Just so sad to see that destruction and loss of life. All right, so the big news over the weekend. It was the administration's goal to have this on 4th of July weekend, and they got it done. So as it's the actual name of the bill, so the big beautiful bill signed into law by President Trump over the weekend. All right, so important to note, we will host a webinar. A lot of little piece of details of this are still being kind of sorted out, and so our team will certainly be hosting a webinar on this in the weeks or months ahead. Without question, this is going to be a big part of our upcoming fall reviews, just with each of you walking through how some of these changes might impact your retirement planning tax strategy. All right, so a lot of fun work for our team. This is fun to dig into some of this stuff. All right, so just very surface level. Again, I'm gonna be leaving out a lot, just kind of outside of the scope of today. But some of the big bullet points, kind of the final provisions in the bill. All right, maybe most importantly for everyone is the tax cuts from the president's 2016. So the Tax Cuts and Jobs Act. Those lower tax rates become permanent. Okay, and what I mean by permanent is they don't sunset, right? So the current the tax brackets, like everything was set to sunset after this year. Okay, so those lower tax brackets are now permanent, and by permanent, certainly we could get new law, from a future administration they could change. But as it stands now, these are the tax brackets until future law changes them. All right, so the tax cuts are now permanent. I think both sides of the political aisle were in favor of that. All right, maybe the most contested piece of the bill was these itemized deductions and increasing that the state and local tax cap. Okay, so what was 10,000 has been bumped up to 40,000 for some Americans. Okay, because there is a phase out that starts at $500,000. So that increased itemized deduction gets phased out between $500,000 and $600,000 of income. Okay, now that's a very expensive tax break from the government, the Treasury's perspective. That's a lot of lost revenue. So for that reason, that increased SALT cap applies actually to 2025, but that provision does sunset in 2029. Okay, so kind of a 4-year run at it here for increased itemized deductions for some. Okay, next little bullet I have, the new tax bill includes many of the campaign promises that the Trump administration was running with. Okay, so tax breaks on tips, overtime pay, car loans. All right, and all these are subject to certain income limitations, phase outs, which we will go over in great detail in a future webinar and things. Also for the new car loans, they have to be new cars. The cars have to be made in the United States. All right, so a number of little pieces that in order to qualify for some of these deductions. All right, also worth noting, there's an increased charitable deduction for non-itemized tax filers. Okay, so as we've discussed with a lot of you, it's just with the higher standard deduction, it just makes a lot of charitable giving Yeah, obviously you give, out of your heart, but it's also nice to receive a tax break. And so increased charitable deduction for non-itemized filers. So $2,000 a year for married filing jointly, $1,000 for single filers. And okay, so then we have that. A big one for many of the viewers here on this video, an increase in the standard deduction for seniors. Okay, so for those that are 65 years old or older, okay, an additional, so in addition to the standard deduction, an additional $6,000 of a standard deduction just for any American older than 65 years old. Okay, also income phase out applies, so higher earning seniors won't receive that increased deduction. But what's interesting, so I read a take on this from a source, and effectively what this does, this is going to make Social Security tax-free for about 90% of Americans. Okay, so for 90% of Social Security recipients. All right, so while there isn't a specific piece of the legislation that applies to, hey, Social Security is deduction or tax-free, this was kind of their workaround, and truthfully probably a more straightforward way to understand it, just giving it an additional $6,000 deduction for seniors. Again, from what I read, about 90% of Social Security recipients, their Social Security will become tax-free. A number of pieces in the new legislation for business owners, the expansion of Section 179, as well as bonus depreciation. Again, that's kind of outside of the scope of this video this morning. But yes, certainly a lot to unpack. Our team will be quite busy here in the weeks ahead, figuring out how we can help translate this into great retirement planning, financial planning, tax planning. So we're excited for this. Also last week, a strong jobs report that we received on Thursday. Okay, better than expected. On that, you saw global markets perform quite well. So equity markets higher. You saw bond yields go up a bit, as well as you would expect something on a report like that. So questions, comments, concerns, please don't hesitate to reach out to our team, and we will certainly be in touch on a number of these items. So we hope you have a great week. Thanks.